row is also not a new row.
We're at report stage. We welcome Minister Carol McNeill and Deputy Pearse Doherty to deal with the amendments. Amendment number 1 comes from the Minister. It arises out of committee proceedings. Minister, will you move amendment number 1?
I move.
Do you wish to address it?
Yes, as I understand, they're grouped. Ken Corley, is that correct? I have amendments 2, 3.
One is not grouped with anything. One is on its own.
Forgive me, I have my other folder. I move. I don't wish to speak to it. No.
Yes.
I want to say a few words. Give the Minister an opportunity just to. Obviously, the business beforehand was moving very fast and swift and caught us all a wee bit off guard. But Ken Corley, I just as we begin scrutiny we've finished the scrutiny obviously in committee stage and dealing with report stage and the amendments here. Just on amendment number 1, I want to first of all maybe commend the hard work which has been sustained over many years of the credit union movement to allow this sector to grow. And credit unions are trusted in all of our communities. They're embedded in all our communities with a long and proud tradition on this island. And credit unions have provided so much to our communities and our economy, and they can do much more. And while many credit unions provide savings account products and consumer credit, many are developing capabilities to provide current account and mortgage lending products, with others expanding into SME lending. And this is all to be welcomed. The financial services landscape has changed and is undergoing rapid change, and credit unions have the opportunity to increase their footprint in this sector and across our economy. So in this changing landscape, credit unions can and must be enabled, must be strengthened, their footprint and impact in the sector. And I want to commend, as I said, the perseverance of the credit union movement over a long period to secure reforms that would unlock their potential. And this legislation is the first substantive credit union legislation since 2011. And this legislation contains benefit for members, for credit union community and for individual credit unions. For community-based credit unions, it will be easier for SMEs in the common bond to access credit, and credit unions will be able to partner with one another to offer a wider variety of financial products, and they'll be enabled to modernise their processes through automated membership and loan applications, which I'll come to as part of amendment number 1. For the first time, credit unions will be able to offer services and products to members by sourcing those services or products from another credit union. The establishment of corporate credit unions is an important reform and milestone. So credit unions must be recognised, collaboration must be supported, and member services must be improved. So this legislation enabled these developments in a number of key respects, and Sinn Féin will be supporting it as we did in second stage and in committee stage, and again now as we pass this bill in the Dáil. So we will be supporting the legislation and its provisions. In relation to amendment number 1, the purpose of this amendment to section 17 is to allow credit unions to put in place digital and online membership application processes while still maintaining in-person application services, and amendment number 2s and 3s are also about that type of modernisation. The question I have for the Minister is this, as I said, amendment provides for the automation, both digital and online, of membership applications, but can I ask the Minister the necessity for this provision? Were credit unions prohibited or discouraged from this modernisation under pre-existing legislation or regulation? So we have absolutely no problem in supporting this legislation. I just find it interesting that there is a requirement to change the law to allow for something that you would expect should be allowed anyway. And I'm just interested, were credit unions prohibited or discouraged from this modernisation under pre-existing legislation or regulation?
Minister.
No, Deputy, no. This is as far as possible at every turn. It's about enabling, and this is a clarification amendment that was sought by the credit unions. So it really is for the purposes of clarification more than anything else.
It's amendment number 1 in the name of the Minister. Agreed. Amendment number 2 arises out of committee proceedings. 2, 3 and 6 are related and will be discussed together. Minister, to move 2 and to address the group, please.
Thank you, Ken Corley. So I move amendment 2, and as you said, this amendment is grouped with all of the amendments. in Group 1 and as raised during committee stage, these are the amendments to Section 67 and related amendments to Section 17 of the Principal Act that will assist credit unions in modernising their membership review and approval processes. These amendments will allow each credit union board to approve new processes for membership approval and remove the need for manual authorisation of the membership committee. That committee will remain in place to deal with appeals.
Anything on this amendment or the group? No. Amendment number 2 in the name of the Minister has been moved. Is it agreed?
Agreed.
Amendment number 3, Minister to move.
I move.
Is it agreed?
Agreed.
Amendment number 4 arises out of committee proceedings. 4 and 5 are related. Minister, will be discussed together. Minister to move Amendment 4 and discuss the 2 amendments.
I move Amendment 4 and as you said it's grouped with all the amendments in Group 2. As referred to during committee stage, these are amendments to Section 36 and a related amendment to Section 37 of the Principal Act, which gives credit unions greater choice and flexibility regarding loan approval processes. Section 37 provides an expanded appeals process for any loans not approved under Section 36. Credit unions will be empowered again to modernise loan approval processes to meet their members' needs.
The Minister has moved Amendment 4. Is it agreed? Yes, Deputy Darcy.
Yeah, and this amendment just is grouped with, what is it, amendments 9 to 16, is it?
4 and 5.
Oh, it's 4 and 5. Okay, so Minister, this amendment deals with membership committees. Is this the right amendment to review doubtful membership applications? I understand that's Amendment 4. And just what are the current procedures in relation to that? And again, the requirement for this amendment. Thank you. In relation to Amendment number 5, I welcome Amendment number 5. I think, in fairness, this was an issue that I brought to the Minister's attention in committee stage. There was an issue with the numbering in the legislation. That's been corrected in 5, and I support that also. Thank you.
Minister.
Thank you. In relation to Amendment 4, in accordance with a loan approval process which has been approved by the Board of Directors, the purpose is, as much as possible, the credit unions have in the past, credit unions have having to spend too much time reviewing processes and affirming processes that are straightforward processes, having to be approved by a physical board at every turn. That is too onerous for a Board of Directors, particularly where we are trying to encourage more volunteers, streamline the processes, make it a more professionally enabled organisation to be run by a CEO. So again, a lot of this is about this isn't prohibiting this approval process by the Board of Directors, but enabling them, should they wish, not to have to do it in person and to enable a certain amount of flexibility to do it otherwise, and including by automation. So that is the broader purpose of those two. That is in relation to the membership, as the Deputy has said earlier, but also in relation to loan approval processes. So there's quite a number of loans that are very straightforward loans. And while we don't want everything being decided by computer, a certain amount can be decided by computer in the interest of members getting quick decisions, particularly for very straightforward loans. Obviously, there is an important degree of human supervision at every stage, but this is about providing greater choice and flexibility to each credit union to be able to adapt their own processes appropriately. And as I said, this is all in an effort to be as enabling as possible to allow individual credit unions make the best decisions for themselves, but to remove some of the, not barriers, but some of perhaps the clunkier elements that were holding them back in terms of time and process before.
Thank you, Minister. Is Amendment number 4 agreed?
Yes, to come back on this here and just excuse my or beg your indulgence. I'm just looking at the note we got in terms of the briefing note in relation to this, and it's obviously helpful always with amendments coming at report stage. It talks about Amendment 4, and just am I correct in this in saying that the purpose of this amendment is to allow for credit unions to put in place digital and online membership application processes while still maintaining in-person membership application service? It appears that that's not the case, is it, with Amendment number 4?
Well, Amendment number 4 is specifically to deal with loan approval processes, but yes, what we're trying to do is with membership processes and loan approval processes, each amendment is slightly different, of course. This Amendment 4 is in accordance with a loan approval process.
Okay.
Yeah.
Okay, Amendment 4 is agreed. Amendment 5, Minister to move.
I move.
Is it agreed?
Agreed.
Agreed. Amendment 6, already discussed with 2, Minister to move.
I move.
Is it agreed?
Agreed.
Agreed. Amendment 7 arises out of committee proceedings. Excuse me, 7 to 16 inclusive are related and will be discussed together.
Oh, thank you. I just wanted to allow the changeover. I know the feeling. I move Amendment 7. This amendment is grouped with all the amendments in Group 3. The amendment to the first schedule is a technical amendment, deleting paragraph 6A. The amendment to the sixth schedule is a technical amendment, deleting paragraph 6 and allowing for the renumbering of subsequent paragraphs. And of course, I can go through that with the deputy, but it is really they're technical amendments to renumber where we've deleted paragraph 6 and essentially renumbered. Now, we do have to go through them one by one, I'm afraid, in terms of moving and approving them, but I can go through them in detail as you wish.
We're dealing with Amendment 7 to 16 inclusive as they're related. Okay, so Amendment 7 has been moved and the question is that the amendment be made. Is that agreed?
Agreed.
Garmagli. Moving on to Amendment 8. The Minister could move it formally.
I move.
So Amendment 8 has been moved. No further discussion.
Yeah, just on Amendment 8. So
There's no further discussion on that, but I let you see.
I was grouped, was it?
Yeah.
Okay.
Yeah. But if you want to I go back because
No,
there's quite a lot of amendments just to make sure there's no more discussion on any of these now. They've all been discussed. So now.
With your indulgence, it's very brief, and I just want to take the opportunity. I didn't catch that the Amendment 8 was grouped with the previous ones, and I think this is the last one we'll be discussing anyway from my side. The amendment deletes lines 31 to 33, which relates to the sixth schedule of Section 68 of the bill, which provides for matters to be provided for rules in corporate credit unions. And so it deletes the text saying that the procedure in accordance with which a person may be designated or de-designated under Section 67(4) and the circumstances in which a person may be so designated or de-designated. And just interested, Minister, can you outline the purposes and or impact of this amendment? It appears to be similar to provisions in Section 6. So the purpose of this deletion and the impact of this deletion, the impact of this amendment. Thank you.
Give me just one moment to update my official. Amendment to Section 67, which was no longer needed because it was dealt with by amendment to Section 17. So it is simply a tidying up and rebalancing.
Thank you.
There were a number of matters that sorry, while I'm still on my feet. Yeah. There were a number of matters that the Deputy asked me about at committee stage, which I'm happy to address at final stage or anything if you wish.
Yeah,
we're dealing with 7 to 16. That's going to conclude it before we move on to fifth stage. So all the discussion is now are again at fifth stage generally in relation to the bill. So I don't mind if you want to come in now at this point.
Is that okay?
Yeah.
Thank you. I want to thank the Deputy for his support in the passage of this bill, which I know he acknowledges the importance to the sector of it. And I think the sector is very encouraged by the broad support in the House for the credit union sector and for the legislation, which will enable them to provide, I think, greatly more support and financial services to people of Ireland. This is very significantly amending legislation, and what I know the Deputy and I hope to see is its implementation. And we will be supervising that through CUAC and trying to make sure that we are achieving what we need to achieve. I want to say that the Deputy asked me at committee stage around the setting of the maximum interest rate, and I committed to coming back to him. I don't know if the briefings in between have answered any of your questions or the opportunity for briefing, but I'm happy to address it if you wish.
Please.
So you had asked me about the oversight by the Oireachtas for the Minister in setting the maximum interest rate in the legislation, and we had a very good discussion about that at committee stage. I did want to point out that there are a number of safeguards at section 38 which replicate similar provisions for Ministers for Finance in other areas, so in relation to the setting of rates generally or the setting of levies generally. So importantly, I think the Minister would have to consult with CUAC before setting the maximum rate. The Minister must also take account of the number of factors set out in section 38.5 of the bill, namely matters relating to the current interest rates charged generally, the market conditions generally, the need to avoid distortions, financial stability generally. There's also, I think, precedent for the Minister to set rates and caps directly without recourse to the Oireachtas in the Consumer Credit Moneylenders Act. So there is provision there and a precedent in relation to it. And of course, as the Deputy has suggested, this oversight is extremely important, but I did just want to come back to him directly on that point. You had also asked me about the consideration of what maximum interest rate should apply and, sort of the upper limits in relation to that. I will have a final consultation with CUAC. However, the Deputy is aware that CUAC has already given an opinion some time ago in 2017, suggested a maximum rate of 2% per month. And the rationale for this increase is to allow credit unions to continue to provide small short-term credit. You had a very, you discussed very importantly about trying to avoid money lenders, and it's a principle I would completely agree with, Deputy. So we want credit unions to be able to provide small short-term credit, loans as small as €100 for a term of 2 months, particularly for members who might be at a time of greater vulnerability in their lives and might otherwise be dependent on the services of moneylenders. That increase would provide the credit unions with the ability to cover the cost of providing those smaller loans. It's not to make a profit, it's just to provide for the servicing of it. So I think you had questions at the time, although I think they've been addressed in relation to the digital membership and the loan approval process. We've dealt with that by way of discussion there. I think you also had a question in relation to the deliveries of documents and so on around consent and the electronic means. As I had said, I think at committee, just to confirm, if no consent is received, notice will still be sent out by post if a member doesn't proactively consent to that to be done by way of electronic means. And the other point that you had asked me was about the review of the CBI policies and the regularity with which those would be reviewed. And I think you had said, look, we haven't had the reviews in a timely way by the central bank, or maybe paraphrasing, that is in essence, I think it's fair to say what you were saying. And the effect of that on credit unions. And I want to say to the Deputy that just this week I met the 2 Deputy Governors of the Central Bank. I raised the need to perform timely reviews with them, that I was concerned that the review period was migrating towards 5 years between the period of the establishment of the regulations and having the review. I've also made this view very clear and plain to the Governor of the Central Bank. It is important that there are timely reviews. It is not acceptable that it takes a very long time to gather data. It is important, and then have a review. It is very important that this is done in a timely way. I do, and I do expect the central bank to be able to do that. It is part of their role. Obviously, at the moment, there is a peer review of the performance of the central bank being carried out by ICERN. I have met with ICERN. CUAC have met with ICERN. The various representative bodies have met with ICERN. But of course I have to recognise that the central bank is independent. The reasons for that are tried and tested, but notwithstanding its independence, I have raised this very directly with both the Governor and the 2 Deputy Governors as recently as this week. I do have confidence in the central bank to carry out its function. I do now have confidence in the central bank will expedite that review. I have received that commitment from the Deputy Governors that they are, that it is important to them that this be done in an appropriate and timely way. I have also discussed with the Central Bank the timing of the commencement of this legislation and the various matters that would be important to enable it to be commenced, the updating of the handbook. I would say to the Deputy that I expect 2 different approaches to be taken. On the regulatory pieces, for example, in relation to corporate credit unions, CUSOs and so on, that they will take closer to 9 months. But on the other pieces, I expect, because the Central Bank has been so engaged in this work for some period, that would be done much earlier in 2024.
No. Okay, so we've dealt with Amendment 7 and that's been agreed. We're moving on to Amendment 8. and if you could formally move that amendment now.
I move.
Okay, is that agreed?
Agreed.
Amendment 8. Moving on to amendment number 9, already discussed, and again the Minister to formally move.
I move.
Amendment 9 has been formally moved. Is it agreed?
Agreed.
Amendment 10, if the Minister again could formally move.
I move.
So Amendment 10 has been formally moved. Is agreed? Amendment 11, Minister.
I move.
Moved. It's been moved and agreed. Amendment 12.
Moved. I move. Sorry.
Amendment 12 has been moved. Is it agreed? Amendment 13
I move.
has been moved formally. Agreed. Amendment 14.
I move.
Agreed. Moving on to the last two. Amendment 15 has been moved and agreed. And the last amendment 16
I move.
has been formally moved. Is that agreed? So Shinjar on Kuigo came. Hanish Lanamajirai Hig on Kuigo came. We now proceed to the fifth stage, Gumaleshkil. And if the Minister could move that the bill do now pass. Move. Anybody wishing to make a contribution? Yeah.
I agree, obviously, with the bill passing, and I just want to thank the Minister and the officials for all the work in relation to this piece of legislation. Minister, I think this is the first piece of legislation that you've introduced yourself. I may be wrong. Yes, well, the first that you've taken through the House. So, look, and I appreciate that the questions that were put, and we had a good scrutiny in relation to this bill, and there's obviously cross-party support for the credit union movement, and I really appreciate the fact that the issues that were raised by me, that you've taken the time to take them, to come back and report back, and particularly that engagement in relation to the review of policies in terms of the central bank. I think that's very worthy and very notable that you've had those conversations and you've got that commitment as well. So happy to support this legislation. Thank you.
Okay, Martin. Tara, did you want to come in?
Thank you, Deputy, and thank you, Lascan Corla. It's with great pleasure that I thank my predecessor, Minister Sean Fleming, for his work in developing this piece of legislation and introducing it in the Seanad, and thank the officials for their extraordinary work over some time. In particular, my Catherine, who has been engaged in every single consultation for some years with the credit union sector. I see Kevin Johnson here to support the passage of the bill, and I know that Credit Union from Kildare was here earlier to celebrate the passage of the bill with Cathal Berry, and indeed David Malone from Ilku was here to celebrate the passage of the bill, because the movement is so excited about this opportunity, so excited about making sure that the credit union movement is sustainable, so excited about being able to provide mortgages to people at more competitive, sustainable rates than has been the case. This is a commitment to being able towards the realisation of the retail banking review and developing a genuinely community-focused, not-for-profit financial institution that has a physical presence right across Ireland, that is totally focused on the needs of its members, and that provides a really genuinely good service to its members in a focused community way. It's with such pride that I have had the privilege of taking this legislation through the House and working with the Central Bank, and working in particular with the credit union representative organisations, the National Supervisors Forum, the Credit Union Managers Association, and I hope that the bill will be implemented swiftly, and I couldn't commend it more to the House. So thank you.
The question now is that the bill do now pass. Is that agreed? And the bill, which is considered to be a Dáil bill in accordance with Article 22.2 of the Constitution, will be sent to the Seanad. So, Garmarket, August Rev.